Hello, everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Iacchino, who I will bring on very, very shortly because he's tight for time. So we'll get straight to him after we say hello, Wavy. Boy, did they jam again. Who's they? Hello, hello. I thought there was some buying pressure starting in mid-morning, and it just there's a pretty substantial bid under the markets all day today. Here comes the bad boys of the market. Who's the bad boys? Boom sauce. Boom sauce. I guess you mean Bob should come on now with that. Good afternoon, Josh. Hey, Waka Waka. We will get to that. Let me just say, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer-term viewers, come back after the video, leave some more comments, and like the videos. With that, I'm going to just bring the magic Bob button on. There's the magic Bob button. Bob is here, tight for time. But
What's up, guys?
how is everyone doing? So, what are your thoughts, Bob? What's going on today? Mixed market, some Google taking a hit, Amazon taking a hit, other stuff like healthcare up, your consumer defensive role going up, oil still strong, real estate nice bounce in that. We had the XLRE I talked about in the weekly sector overview trigger a double today. So, any thoughts on the numbers that came out today? Any thoughts on the markets? Any thoughts on the Fed? Any thoughts on life in general?
Life, no, but a couple of things about the markets, if you'll bear with me a second. The UK is in horrible shape. That was a horrible PMI number out of the UK just because of the size of the drop versus the last figure that they had out. That was just absolutely horrendous. And overall, all the PMI numbers, which I don't know if I've been on these live streams enough to, I'm talking about the services PMI, by the way, but I don't know if I'm on these live streams enough to point out how important PMI figures are to trajectories of economies kind of in general, right? The PMI numbers are very good leading indicators, and they're timely to a certain degree from a perspective of what they're actually dictating. I mean, these are May figures that we're looking at, and it's May 24th. So you're getting a flash look at the May figures, and they're bad. They're really bad. You had a slight beat in German manufacturing PMI, not by much. And then you had basically the Euro miss, the EU PMIs miss. And then in the US, you had a slight beat in manufacturing, manufacturing matched, but everything else was under what was supposed to be and under last. Then that new home sales was horrendous. So the data, again, pointing to weakness. And really, we got that second leg down when we had data. The first leg down came with Snap and their profit forecast, which really hit the entire market. So who is that in there? Cal in Hawaii said I was promised a rally. If you look at the Dow, Cal in Hawaii, you got your rally. You got it, right?
Yeah, you promised a rally. We're still setting up for
a rally. I don't know. Promised a rally to.
Well, I didn't promise a rally, but the stuff says. I mean, all the statistics or the stats favor a continued rally. That doesn't mean you have to rally every day.
Mm-hmm.
I thought the S&P price action was fantastic. Get that sell off straight to that 62.5 level and then coming up. No, did it close green yet? No, but there is a very strong bid under 3,900.
And I'm saying if you were promised a rally, the Dow did rally.
Yep.
The Dow's positive right now. So there's your rally. And what the Dow rallying tells me is that this short, medium-term bottoming is likely going to continue. And the reason I say that, it all depends on the price action. But the reason I say that is because instead of just panicking out of everything, which is what you saw, copper sold off, treasury yields were markedly lower. So that was flight to safety. Precious metals were higher. But people started going into defensive stocks. When you see them hiding out in stocks, that's the way that I see the underlying bid that Mike's talking about. They're not just selling out of everything. They're going into defensives. They're going into financials. Walmart, a little bit of a recovery there.
They're going into healthcare. Healthcare is also a hiding place.
Yeah, that's a defensive sector. So that's the kind of thing I'm certainly not bullish. I certainly still think, you had another dip into bear market territory today um, for the ES. I don't know about the cash. I haven't measured out the SPY, but in looking at the ES, you had another dip into bear market territory. And I've said it before that I feel very strongly that, off of the lows today, well, not quite, I'm sorry. Off the lows, the ES was down 19.47. But on the 20th, we were down 20.81 on the lows for the ES. And I said I think they have to go into bear market territory, but they have to close there for me to say it's in a bear market, which hasn't happened yet. Certainly it didn't happen today. Strong price action on the 20th, strong price action today, rally on the 23rd. So I think you're getting your rally, Kellen. I really do.
And whereas, again, there's a strong bid under here. Nasdaq, we actually formed a double, and then the other bigger double is still in place, even with this double sided, because this is still part of the same left right hand side. So we do Nasdaq is no deadly the weakest thing, but the S&P there's a really nice bid and bounce back, and the Dow was a really nice rally, and the notes again that triggered this inverse head and shoulders, continuing to move up. I'm expecting still a multi-day rally out of the notes over the long term. Dollar index coming back down from our head and shoulder top, hitting the second target today. So we got some interesting price action.
Boy, there's a lot in the chat that I want to comment on.
Let's start commenting.
Well, Waka Waka says, yes, PMI is bad in the UK, but won't short FTSE as it's mostly commodities based. That's not what Waka Waka, I'm not referring to equity markets. When I talk about the PMIs, I'm referring to GDP in a recession. Okay, I'm just talking about a recession. Stocks can rally in a recession. You have to differentiate between economic commentary and price action commentary, which 99% of the time I'll just leave to Mike, okay, because he's better at it than I am. But from a recession perspective, the PMIs are pointing to a recession in the UK. And then you can go down to Ancient Astronaut. I've been financially ruined by ARK. Ancient Astronaut, if you've been financially ruined by ARK, then you're new here because you wouldn't have been so deeply into ARK if you'd been here for a while, because Mike specifically and both of us in general have been talking about ARK for a long, long time. So I would say that, at the risk of, I hope I'm not upsetting you by saying this, but you've been financially ruined by your decision to go into ARK. So I wouldn't necessarily, I'm just saying you're probably new here if that's actually a serious statement.
And I don't even want to talk about ARK. It did fill the gap. But ARK,
it's been a bad investment. It's been a badly structured investment for a long, long time. They just bought high-flying momentum stocks, and they basically tricked people into think that those were somehow sound investments because they were making so much money for a period of time. This is something that Mike and I have said for years and years and years. You cannot extrapolate risk from reward. You can't separate the two. So if something is making a ton of money, it carries a ton of risk, period. End of statement, end of book, the end, part 2 coming later. There's no sequel. If something is flying high, it carries with it a lot of risk. And if you don't realize that, I don't know. We just have to keep saying it, I guess. That's kind of what I mean by that statement.
I talked all the time, vertical up, vertical down.
Yep.
Generally, because stuff that outpaces, this is not a sustainable return. And you even see it in stuff that people said, what's Tesla off 50%? This can still drop a lot more, but you got these vertical up moves, and now you're getting the vertical down moves. It doesn't matter whether it's crypto, whether it's GME, whether it's AMC, whether it's whatever it is. When you get these vertical movements, you also get these vertical corrections generally. Things can try to stay up longer, but it's not sustainable. That's one of the problems with, if you look at the like a monthly chart of the Nasdaq, this is where there's could be a lot more pain. I mean, this little stuff, when it just went absolutely vertical, and you're starting to see it unwind in a vertical fashion.
Right.
When you look at it in the monthly context.
So, you've all heard the phrase flying too close to the sun. I think everybody knows that comes from the Icarus myth. I'm assuming everybody knows that. If you don't know it, just read the short story about Icarus. But basically, when you fly too close to the sun, you fall to the ground a lot quicker when your wings melt. That's basically the story. So, and that's not us discouraging people from getting into risky assets. It's not it at all. We've both done risky trades, Mike and I. I've traded a ton of crude oil, which prior to cryptos, that was the riskiest thing you could trade in the futures markets. So we're not trying to back you away from risk. We're trying to get you to size things correctly. When you've decided to get into something that carries risk with it, you have to size those positions correctly at a level that you can afford that when your wings melt. Or you get out of them more quickly and you don't get greedy on them. You don't hold on to these things and then you watch them go higher and you're all upset. It's very much why Mike and I, from a price action perspective, always have targets. We have targets on our riskier things too. And when the trade gets to those targets, we're either out or we're trailing a stop. That's because when those things collapse, you want to be able to get out, period.
And you don't
always collapse.
You don't want to let anything ruin your portfolio.
Mm-hmm.
Because now it's, again, you take a 50% loss, you have to have a 100% gain just to get back to where you were. So, yeah, you're going to take losses in investing and trading, but you're trying to minimize your losses, because then when you get into great market conditions and things just run, you keep trailing a stop until, when you raise it at your targets or you get out of some at targets, and then you keep riding the markets. This is not the market to ride, and this is always why we preach, before you get into a trade or investment, know your stop. And also know how you're going to trail your stop. So you're not caught in something, because everything turns around at some point.
Yep.
It does. Even the best stocks turn around. So
I'll add something to that, Mike. Have an idea of your target. So like if you got into ARK and your target was infinity, it's financial ruin is in your future. Okay, I mean, it's that way with anything. Mike and I have gotten in several trades. If I open up like the master portfolio for the stock think tank, you'll see several stocks 2 and 3 and 4 times over the last 3 years. And that's because you don't have to just avoid an investment once you've hit your target and you're out. You just wait for price action to put the probabilities in your favor again. When you look at something like, I'll give you a really simple example. Human beings eventually stop growing, right? In height. Maybe
I was gonna just say that.
Maybe not in width, but in height, you eventually stop growing. You almost start shrinking. There's something like ARK. If I'm gonna bet on the height growth of a human, am I gonna bet on like a 2-year-old turning 3, a 9-year-old turning 10, or a 30-year-old turning 31? In other words, when ARK starts to run, or when anything starts to run that high, yes, it's possible for it to keep growing. Investments can grow basically forever, right? But what's more likely, something that's gone parabolic or something that the price action shows good returns over time and it's been kind of flat lately? What's likely to have a larger move? Now, obviously, it's too simplistic for an investment. But when something goes through a growth spurt, you might want to consider taking some chips off the table and waiting for another flat period and another price action signal for a second growth spurt. That's kind of, I think I got to work on that anecdote. I don't think that one really works, but.
Yep. So, just again, one takeaway is don't over consolidate your portfolio into just 1 or 2 things that are high flyers and then not have stops.
Right.
because it can hurt. You're better to get slow and steady wins the race overall. Chasing a lot of these people, that's where there's going to be the ruin to a lot of diamond hands. If they're truly diamond hands is one of the biggest ruiners of portfolios ever.
Well, I've just never understood this idea like, let's keep holding. Well, when are you getting out? Never. Well, what's the point then? What do you mean never? You're passing these stocks on to your shitty kids? Sorry, I don't know. I don't know that people have shitty kids, but I'm just saying in general, it's like, what do you mean never? Like, that doesn't make any sense to me. You look at what happened to AMC now. I mean, there's a double bottom forming, at least potential double bottom, I should say, on the daily. Or you look at like, GameStop or even Bitcoin. I mean, GameStop's it's an ugly chart. There's no really good pattern there as far as I'm concerned. And then you look at something like, I like to look at the Bitcoin futures just because I think the price action is more reliable when I look at them. But, you can't just look at these things and say, well, I'm use Arkin as an example. I'm in ARK and I'm just holding it. We're holding it for when? Well, retirement. Okay, well then you're not financially ruined. And again, I'm done talking specifically to ancient here. Just speaking in general and using ARK as an example. It's like, well, I'm holding it until my retirement. Okay, well then don't worry about it. Like, you're not looking at it as something that's going to take care of you today. Well, I'm holding it, I'm trying to double my money and then get out. Okay, at least that's a plan. I don't know. I think I'm beating a dead horse here.
Yep. This is where I like to see. I really don't like moves like this.
Mm-hmm.
Why? I mean, even in the short term, I don't like them because you tend to get these moves. I mean, I'd rather have something just slowly grinding higher.
Yep.
That's preferred because, again, and there's ways there's other strategies you could do around something slowly grinding higher with options and everything else, but it's much more sane to trade than try to eke out, oh, look, I've made 100% in 2 days. Well, you could also lose 100% in a day.
Right.
So, hey, Lauren, thanks you for the super stickers. Again, big shout out to Lauren for those super stickers. Where do we sit now? Wall Street bets all in, what is that, 10,000% leverage out of the money calls on Tesla. See, this is where they keep telling people, and then I see I talked about this the other day. What's a margin call? Okay, I'm sorry, but that's the kind of stuff you get.
I'm gonna tell a quick story, and then while I'm telling the story, if you guys have any specific questions for me, otherwise I'm gonna jump. There's this guy I knew, and he wouldn't mind me saying his name. His name was David Friend, and he was a trader down on the trading floor years before me. And he was just a small trader, 10 lots, 25 lots, nothing big ever, right? But he would go on these extravagant vacations, and he had 3 cars, and he had a great penthouse apartment. I was like, I don't understand how this guy lives the way he lives. He's just such a small trader. Like, does he have family money? Somebody told me, oh no, during the 87 crash, he left the trading floor a week before it happened on about a 3 or 4 week vacation. And, there were no cell phones, right, at the time. So they couldn't get a hold of him. He had a 25 lot out trade and it went his way, right? He was basically short S&P futures. And when he came back in, he was basically a millionaire. And it was a mistake. It was an accident, right? Well, obviously, after about a week of it, 2 weeks of it, one of his clearing firm covered it for him, and one of his clerks signed off on it. And he basically gave the clerk $500,000, and that was he never made a big trade ever again in the entire time. He just came to work, played around here and there, took his winnings, and went home. Now, there's times where he said, he knew there was good trades that could happen. He could have put on a big trade here, and if he lost some money, it wouldn't have mattered that much. But the way he looked at it, he basically had a pot of gold drop in his lap, and he wasn't going to risk it. It wasn't worth it to him to try and prove to himself that he was smart. And that's, I think, what a lot of diamond hand people probably were thinking when they were hanging on to GameStop and AMC, and there were a couple of others, Highcroft Mining, and I mean, there were some others before that as well. But there's some guys that took their profits and they just moved on. But other guys were like, I'm holding this forever. I'm adding here. This is, we're fighting the hedge funds. It's like, dude, stop. It went up and it wasn't supposed to. It just wasn't a logical thing. So this is the kind of thing with trades like ARK and to a certain degree crypto, although I still kind of believe in crypto. Just have to have these stable coins wash out. And, the guy just took his winnings and he went home. And I think when something happens that quickly, it's a good lesson to be learned. Not necessarily you have to do it. You can still trail. You can always trail. But I don't know. It's kind of a good story that I keep in my head all the time.
Yeah, and again, don't mistake. A lot of people thought they were geniuses. Just like in the .com and just like in the run-up in ARK, I'm some trading or investing genius, and they wrote it up and they wrote it all the way back down because they never locked in anything. They just thought it would keep riding the gravy train. It's like still had people last year taking out home equity loans to go all in the stocks, and that's not turning out so well because they didn't get out.
Yeah.
So we'll see.
All you got to do, Wavy, is start working with targets, my friend. Talk to Mike about that. He can teach you that. All you got to do is start working with targets.
Yep, you got to work with. That's why I teach stuff with targets, because you can at least take an action. You don't have to necessarily take profits. You can take an action, and then action can be, I'm raising a stop. I'm trailing.
It's also something Mike and I teach. A target doesn't necessarily mean you have to take a trade off. A target is a place where an action is needed, where an action is demanded. That action could be taking part of your trade off, could be taking all of your trade off. It could be moving your stop. It could be placing a stop for portions of the trade, not the rest. Targets are where an action is needed. And if you take actions at targets, you protect yourself over time. The guy next door to you that buys the next penny stock and it goes from 90 cents to $3 is going to be bragging to you about it all the way home. But you'll never hear when the other stuff happens. They'll never talk about it.
Yep.
Anyway, I got to run. Anybody got anything for me? It doesn't look like it, so.
No, I got to cover some price action, so thanks for being on here. Anything you're expecting, any interesting stuff from the Fed minutes tomorrow or anything?
No, but I might come on tomorrow if there is something. I don't think there's going to be anything drastic. I will say this. Pay as much attention to Mike's target levels as you do to anything else. Okay? I think you guys would probably like to lean when Mike sees a direction. Pay attention to the targets and pay close attention to what happens when the price gets to those targets. That's probably the number one thing you can take from Mike with this price action stuff. Watch what happens when price gets to the targets. You learn a lot from that.
All right. Wavy says, see you, Bob. Thanks for this. There you go.
See you guys. I'll see you on Thursday, but maybe tomorrow as well.
Okay. Thank you, Bob.
Cheers, guys.
I am back. Small Mike. Let's just go through this. Again, we already... oh, boy. Failed to open page. What is it doing to me? By the way, just to get through concise, we got mortgage stuff. Again, housing numbers were terrible today. But we did trigger that number in the XLRE. Now, can housing hold up a little bit better? Because I think mortgage rates are going to start stepping down with this rally in the 10-year, which means the decline in the yields. Durable goods. So we might not necessarily get so many people are talking about a housing crash. I think it could soften a bit. But, a crash would be interesting. We'd have to have a much bigger market wipeout, which is possible to really get a housing crash. Durable goods tomorrow at 7:30, so I will be on 30 minutes after that, and that's potentially moving, market moving again. Gas and oil stuff tomorrow. So if you're trading crude, don't forget about this. We got Brainerd speaking at 11:15 Central and FOMC minutes at 1 Central, 2 Eastern. So pay attention to that. Fed watch is still about 90%, and we're still in negative gamma territory. Just wanted to cover that with earnings. Actually, Nordstrom gave halfway decent guidance after the close. Tomorrow morning, not a lot, but then tomorrow afternoon we do have Nvidia, so keep that in mind. Please keep that in mind. Let's take a look here. Let's see. Let me get back through some stickers. Again, huge shout out, Lauren. 2 super stickers today. Thank you so much. You're just working on the gold stars every day. What? Arc the popcorn trade. It was interesting, we got some down, but remember, markets, especially in bear markets, you can get the strong rallies, but this wasn't necessarily negative price action day. It was testing some key levels. Look at your 62.5. Let me pull off this one because that's on the way back up. But here was the 62.5. I even talked about that this morning. That if we broke down, we got some momentum bars off the open, straight down to that 62.5. So remember, I watch for reversals between the 50 and the 62.5. And we definitely got the reversals down here. There's your 62.5. I don't think you can get much more accurate than that. And then we got a nice little reversal pattern moving on up. Just those momentum bars off the open, then that reversal right there. So that was pretty decent price action, at least testing. And what I'm talking about is under 3,900. There is, even with the lower liquidity, there is a very decent bid under there. It's a little wider with the levels, but there is a bid. That's why I'm still leaning bullish. We got the first hit of the rotation zone, the pullback, with the bid coming in after, getting below yesterday's low to that key area. Remember, watch between the 50 and the 62.5. Let me get my other levels on there. Oh, come on. Come on. There we go. There we go. I wish it would just do that. All right, then remember, we also ran up between the 50. That's the blue lines. Let me take off the purple lines between the 52 and the 62.5 yesterday, and then we rotated down to test the other side and moving on up. Why is it important? Because a lot of times you need these moves to really solidify some kind of short-term bottom. And we still have, you got to learn to trust things. Cycles turning up, RSI getting up here, and we had the divergences, and you can still get these shakeout moves. Can we still head lower? Yeah. Key line again, essentially today's low, 62.5. Nothing's changed with that level. So if something disastrous happens overnight or tomorrow, and especially we start getting momentum down below that level, or we get a key close like a daily close or a 4-hour close below that level, yes, things will definitely change. Until that, we're still in short-term bullish. We have divergences off these bottoms. Short-term bullish. Tomorrow I'm watching for a return to yesterday's high, and then we get that close above the 62.5, which is about 39.87, 39.88 area. Then I'm watching for my first major target. Then is 40.59, 40.60 area. Why is that my major target? Because statistically, we favor a return to that somewhere up in here, and that's where the top of the daily rotation zone is, and we have a declining trend line, so we could poke through that, but I'll watch in relationship to how we close. Yes, we still do have, even with this little dip back here, we still do have a potential double bottom. Potential, I'd really need a close above 40.95 to use these higher levels, not just a trade above there. This would be on a daily closing basis, because then I'd like to trade it shorter term, because these are very tactical markets. But that's the key price action there that we will fine-tune tomorrow. Nasdaq coming down. You got the momentum straight off the open. Hope everybody's learning the spot. Momentum bars and not stepping away. And the great thing when you get these one pause bars and then you take it out with the next bar, that's a fantastic trade to go with it. And that was the double. Who pointed out that 1 hour double today? That 1 hour little double right here. That then came back down, hitting that second target, not quite to the 87.5, but this was a great target area. I said I'd start watching if we got some momentum. The target's down here. We got the nice little reversal off of there. That's why it's great to have targets. Then you got a bottoming pattern right here. Hope you spotted the bottoming pattern right at those double targets. And then, you know, the sort of the rip back up. They bought the markets. They did. Now, Nasdaq's still the weakest of the bunch. So on rallies, where do you think I'm turning? I'm turning to the Dow and the S&P first. Way first. Nasdaq, you know, it came down, but it could not close below that 62.5. Still holding up above there. So on the reverse side, we start getting back. You see the 50% level with the declining rotation zone. Start getting back above a 12,050. I'm targeting 12,175. Then we get a close above there. See, this is a valid potential little double. Do you see this? And look, the next 75% harmonic from this retracement move is right at the first double target. The second target from the double is right at your 87.5. So everything's sort of aligning if it breaks up still. And that would just be for a return to test this 12,600 area. And it is against the daily rotation zone, so it is slightly lower probability. And you also see here with this prior harmonic that would again tested today. So there are still short-term bullish plays in here, and there is a pretty decent bid below about 11,800 in the Nasdaq. And we got the divergences there. We got the cycles turning up. So there could be, again, more upside to this. We'd need to trigger this other pattern before I get into more medium-term bullish. But short-term bullish until we get that close below that 62.5. I have to stay with these short-term bullish patterns. Dow coming back down, just retesting, then rocketing back up. Rocketing back up, nice little double pattern right here. Don't need to review everything in that. Tomorrow, I'm watching for a return to about 32,150, and then my major target's about 32,386. Does it have to happen tomorrow for that full target? No, I'll be watching the next couple days. What would invalidate it? Now you're going to do these moves. I know it's boring, but this is a repetition. If you have a systematic framework, 31,100 essentially. You get a close below 31,100. Not good. And again, I get people reaching out to me. Your levels are too far away. Use smaller positions. Why do you want levels, especially you want the key statistical levels, especially in markets like this, because else you could get whipsawed by the volatility. And if you don't have any, if I had a closer statistical major level, I would tell you. That's where a lot of people get flawed. They try to trade too big and keep too tight stops, and they get stopped out repeatedly, and it costs them more money than sticking with a smaller position with a bigger stop where it's statistically relevant. If there's another thing you learn from me, that's you should trade with levels that are statistically relevant and smaller position, bigger stops. You're going to, over time, have a higher win percentage and take less losses. Full targets on here about 32,400 if we hit the other side of the rotation zone. Just want to check out on the way where, let me just take off something here. Right here is the 62.5, and it closed above it on the Dow. So the Dow does favor statistically now a return to about 32,393 to somewhere in 32,672. Why would I be targeting the lower end? Because that's where the daily rotation zone is. Let's see. You're still taxed in your cardboard box? How bad are property taxes in a cardboard box? Market will bottom when Peloton hits zero. Peloton will be bought out before then, Rich. Thank you, Ancient Astronaut. I hope you keep tuning into this channel. That's the point we're here for. We're not here for hype. We're here to literally help people. It all comes to greed. People don't want to take profits. They could be up 5. They wait for 7. They get 7. They want 1,000. They want 1,000. That's why they also ride it back down. But if you have a trailing stop and you don't get greedy, trail out. Where do we sit? Discipline sometimes requires pain to modify behavior. Completely agree, Patrick. People hopefully learn from their mistakes. And I feel bad for people who take portfolio hits or big losses, but then hopefully it puts them in the right direction and they learn from those behaviors and they don't repeat it. The worst thing that happens to newer traders and investors is them to get into a screaming bull market and think they can do no wrong and think they're the next genius stock picker when, you know what? They're not. And they don't have methodology, and they think, hey, look, I've turned 10,000 into 100,000. I'm some genius, and then they turn that 100,000. They could even turn 100,000 into 200,000, but then they turn it back into zero. Or worse, they lose more. Diamond Hands is a Wall Street bet strategies. They say it in terms of never sell on drawdowns, i.e. no stops. It doesn't mean they will never sell, but they will never sell stock when at a loss. What happens if you're in it? I mean, I showed you that Cisco chart repeatedly. There are people, they're still in Cisco from 2000, 2001. When? You're actually taking a loss on your money then. You are taking a loss because you have money tied up that's not doing anything. At least, hopefully, you're in a stock that paid a dividend so you could get something from that. AMC, they say, is sticking it to the guys above. When you get time, watch on Wall Street Bets on YouTube. It's insane on the trades some people make. They popcorn trade so big and bad, I don't even want to know. So it's the AMC Apes, the GME Goons, the Tesla Bulls, or the Bitcoin Moon Boys. I never knew all the different names. Let's see. I guess those were some other of the stocks that popped. KOSS, BBY, Playboy. Let's see, where do we sit? Well, thank you, Wavy. I hope you are learning something from me. Hey, welcome, Connor. Glad to have you here. I'll have to let Bob know that you liked his story. Are you going to hold off the move with real estate coming down? No, I'm just working on getting stuff listed. We're still working out one little issue with the plan, and then I don't care if it comes off a little bit because I'm still way ahead. I'm looking to make a move, and I'm not looking to rebuy yet. So that's where I sit. Let's see. George, is that mine? Have you ever looked at the market psychology chart? Do you think it is useful? You have to cite which one, because I've seen a bunch of different ones. By the way, I was kidding about the rally. Let's troll Tesla. You guys are bad. Any expectations on FOMC impacting the markets either way? I don't know if there'll be anything eventful in the minutes that aren't already expected. I will pay attention to the volatility around that time, though, because there could always be something. I'm not expecting it, but there always could be something with the FOMC minutes. So don't just, if you're trying to trade with something really tight, just be aware of that 1 p.m. Central when it comes out. You could get increased volatility. Snap was Grim Reaper. Snap. Yeah, Snap. Snap is ugly. Snap is just ugly. How much is that off the highs? Nearly 85%. That is just brutal. And this is why you don't want to ride something all the way down. You're better to get out, especially when key support's broken, and take, worst case is you take a loss, but it's better to take a loss up here than a loss down here. Let's take a look at a couple other things. Crude, by the way, crude it had this little, I'll show you right here, just little mini head and shoulders, and coming back down to the first target, there is and I was looking for this for levels for strength, and you see here that first target, there was a consistent bid just below that first target. That was just something short term, but there is still a very strong bid in crude. That's why I was watching that to see how the market would react at those levels, and it's still holding up quite well. So nothing's really changed from my other commentary in crude. Gold, again, moving up nicely, coming to the next harmonic level right here and pausing. So it's at least trying to turn the corner. Next level is 1884 for me. Notes. Again, still rallying up, expecting the multi-day rally. Even on pullbacks, still expecting the multi-day rally. This could be a position that it's in for a few days to potentially a couple weeks. Dollar index rolling down, still pausing at the second target, but expecting, even on rallies, another rollover play, at least to that final target. Tesla, breaking again below the channel line, all the way down to 620. My next key areas are about 611 to 613, then 594. On any rallies, I'm going to keep in mind we had this nice little gap. Not a great, here were your gap harmonics. Where did that go? Don't do that. Come here. Sometimes. Coming back. Rallying back with the flag to the 50 to 62.5 of the gap harmonics, and then rolling over again. So just keep in mind for tomorrow, or if it's going to, there's a little double into the close. But your key level is essentially above today's high, just above there, 654.64. So if you start getting key closes above that, I would target the gap fill, especially if we get a continued rally in the bottom. If we sell down and break through today's low, 611 to 613 is my next area. So that's what's going on in Tesla. And even if you do have this gap fill, you see here that's just essentially returning to now the bottom of the 4-hour rotation zone. Do you have a potential double here? Yes, you do. This is a potential double. So if you got a stronger rally in Tesla, which would just be wonderful to load back up on shorts, first target 709.61. It is lower probability since it is against the 4-hour and daily rotation zones. But then your next target at the 62.5 of this down move. So you have the harmonic, the target for the double with the 62.5 harmonic. So that would be really my full target, 725. That's where it stands. And then 739.28 just for the point of completeness. Let's see. In UK, we get taxed both ways, and then they give you free slap. The 200% are the tax. Oh, Walker, you make me laugh. You guys make me laugh. Tesla, Amazon are still expensive. Market will not bottom before these two stocks become a little bit cheaper. I think Tesla could become a lot cheaper. Where does it sit with the Amazon? Just looking at, I'm not going to go through all the things. I just want to see the PE is still 51. Agreed. But especially if earnings deteriorate on Amazon, just with the recession looming and the consumer pulling back with retail, this number can get worse even if Amazon sells off. So longer term, I am not bullish. There's a potential it'll double. But longer term, I'm watching for lower prices there. I'm really watching for market will not bottom until Apple has to really take a hit. Apple still has to, in my book, P to E has to still come down. I expect over time Apple earnings will come down, and I'm really focused on, at least that pullback to 120. Would not be surprised if we get into a really deep recession for this to reconnect with the 200-week down at 100. Oh, brother. Please, no. I'm not even going to read that name. To promote Beyond Meat as new chief taste consultant. What the hell is a chief taste consultant? Oh. Microsoft and Apple that hold the key to the market. When they dump, everything will dump hard. Yeah, when Apple really breaks down, and this is a decent sell-off, but this is not. I'm expecting this to at least play out for these double targets. So rallies are to be sold on Apple. When those two really take a hit, and Microsoft, remember we have this head and shoulders when I'm trading with the horizontal neckline. I'm also expecting at some point Microsoft to reconnect with its 100 week, but I wouldn't be surprised to see it easily back to 210 before all this is over. You make me look like a bull, Waka Waka. Apple to 60, 70. It could. However, 100 unless if we go into a major recession, because they would really need to take a hammering on their earnings and give really poor forward guidance. The bulls are getting desperate when they bring Kim K along. What did Beyond do? Did it pop on that? It probably did, because they bring out a cheap. Oh, look, it's up just slightly. That's not going to last. Here's another one. Vertical up, vertical down, vertical up, blob. Look, we're almost to the next harmonic. Is that going to trigger a little mini double? Not yet. Can't even get a bounce. When you can't get a bounce off the Kardashians, what good is it? You should be able to get some kind of bounce off the Kardashians. I know the Kardashians have some bounce to them. So there. Now, is my channel going to get slammed again? Don't talk about the Kardashians. So what's next? Kimball's going to do a crash dummy test in a Model 3? All right, Wavy, you win. You win the comment of the day. If Apple hits a 20% loss, which I think they will due to China lockdown and factory lockdown and global slowdown recession, people won't pay at high stuff like Apple and Tesla. I agree. No Kardashian fans here? You mean this isn't a channel that Kardashian fans turn into? What do you mean? Oh man, that was the user base I was going for. My day is ruined when I can't get, what is it, the TMZ viewership, the Kardashian. I don't even know. I don't pay attention to that stuff. All I keep seeing besides Kardashian stuff all the time is Amber, and I have not followed that. I don't have time to follow this crap. But what's going on with Johnny Depp and Amber Heard? I don't even know. Who has time for this when these markets are like this? Well, you would get more subs. Yeah. How long do you think those subs would last? Your ideal target audience is the Buffett kind of investor, not the diamond hands boys. It's why this channel grows. It's sort of like you want to grow your portfolio, your investments over time. You want slow and steady and consistency and reliability. You don't want vertical up, vertical down. Buffett in a bikini. Don't even give me pictures. Waka waka, you're putting pictures in my head that I don't want to see. Amber Turd. Why eating fake meat if you're a vegan? I can't understand. Yeah, if you're a vegan, why do you need meat products? Why do you want fake meat? If you're saying I don't want meat, why do you even want something that tastes like meat or looks like meat? Doesn't make sense to me. I completely agree, Rich. With that, let's just peek at Nvidia since they do have earnings tomorrow after the close. You still have a potential double in play. Although longer term, again, statistically, we should reconnect at some point with 144.86. Oh, I get, yeah, okay. See, this is how little I know. I've really got to. No, I don't have to brush up on any of this. We killing it lately. All right, everybody. All right, there we go. By the way, if you are new here, I keep seeing some new people pop in. If you like what we're doing here, please do consider subscribing, supporting the channel, ringing that bell, hitting that like button, leaving some comments. I really appreciate it. More and more people coming back to leave comments after. Please keep that going. You can see new names in here, and it does help people. We're trying to be here, and we have some great chats. We get to joke around. We get to look at literally stuff that can help people become better traders and investors over time. And we're not a pump and dump channel. Lauren, thank you again for the super chats. Gold stars all around for Lauren. With that, I will be here. Durable Goods, 7:30 Central. I'll be on 30 minutes after that, so I will chat with everybody then. Have a wonderful evening. Bye for now.